Hello out there in the crypto world with DeFi, IoT, Latin America. We're going to do something different. We talked last week that we were going to kind of change things up a little bit going into the new year. So we're going to start doing that. We're going to kind of roll out some different things. We're going to get really kind of basics and kind of walk everybody through into the crypto world and understanding it and why cryptocurrency is an important area to look at, especially with the threat right now of a hyperinflation hitting the United States as well as other parts of the world. So let's talk a little bit today about inflation, what causes inflation, and then we'll talk about at the end why cryptocurrencies, especially Bitcoin, is really actually a good inflation hedge. Some say it's not, but some say it is, and we here at DeFi IoT Latin America want to explain to you why we think it is. So don't go away. Let's jump into how we're going to beat that inflation that's coming at us. So I guess the thing we should do first is talk about a little bit what is inflation. And I'm going to give a couple examples. Right? If we jump in here to the computer, you're going to run into, we'll just jump in and see what the definition is right here. Inflation is the decline of a purchasing power of a given currency over time. The rise in the general level of prices, often expressed as a percentage, means that a unit of currency effectively buys less than it did in prior periods. So that's what we're going to focus at. The dollar, we use a dollar. We're going to show that basically what inflation is your dollar loses buying power on a daily, weekly, monthly, annually basis. And there are various factors that go into what causes that. There's a natural inflation that the Federal Reserve has built in. That's basically how they make their money. And there's also forced inflation. So when you combine those two together, you can worry about hyperinflation. And hyperinflation basically is, we'll start out, inflation is when incrementally the dollar begins to lose value and prices begin to rise, slow and steady. It's inflation. Hyperinflation is when all that happens fast. Hyper, right? Comes on fast. And it's really hard for the economy to adjust to it because salaries, wages do not generally reflect the raise or the rise in income versus the rise in prices and the cost of living. Therefore, hyperinflation, which then causes an economy possibly to collapse. So let's keep going here. Let's look at some examples. I'll try to keep this as simple as I can. Here's an example here. All right, let's just take this exclusive pair of sneakers, right? Inflation represents, in other words, how does inflation work? Inflation represents the rate at which the cost of goods or price of something or a service, right, increases over a period of time. So you have a demand pool, right? So the demand is this. You have an exclusive pair of sneakers. There's not very many of them. It was $100. Now, because they sold, let's say there's only 150 of those pair of sneakers, they sold 100 of them. So all that's left are 50. So they raise their prices to 150, knowing that people will actually still buy that for the 150 because they want it. Some desirable. That's a demand pool. Okay. So that forces a price. When demand for goods or services or a product exceeds the production and capacity. That's a problem right now that we're looking at in the United States and in the world because of the whole pandemic issue and all the lockdowns, as well as not many people being able to go back to work still. The crude and raw material that was going into these factories to make products was stored. So when we went through the first year of the pandemic, we were okay. There was still crude material there, raw material. And now that's all been consumed. So you don't have the production of that raw material. So you have less product that's going into the market. So you're starting to see runaway prices, prices increasing rapidly in the United States and other parts of the world. A cost push, okay? You have, just use the example of balloons. Helium was $10. Now helium is going to cost $20. So if gas rises, and the expense of actually transporting something or blowing up a balloon in this case costs more money. Therefore, that rolls over to the products also being sold. In other words, if I am a manufacturer and the cost of transportation, because gas is going up, is more, I will roll that because the trucking industry or the train industry, whoever's moving the airline or shipping, whoever's moving our product as a factory is going to charge me for it. If they charge me more than it did before, I'm going to put that into the cost. I'm going to absorb that, not eat that if I'm the manufacturer. So that's going to roll over to the consumers. So therefore, you have a cost push when a product cost increase in prices, okay? Then you have the built-in. When prices rise, wages rise too in order to maintain living costs. That's what we're talking about. So when you have a slow and steady growth, then wages generally will begin to rise with it because people will begin to demand that. And here's a problem we have. When you have forced wages being risen, in other words, you have unions or you have government obligating companies to pay a certain amount of money, in a certain point in time, that's good for the economy. But when the economy corrects, you got to maintain that, and that hurts the margins. And what happens then is employers begin to then fire or let go or eliminate positions. Then that hurts the economy. So an economy should be going good with fixed minimum salaries where a company cannot be flexible, it then actually has a reverse effect. So forced minimum wage or forced wages by unions or government are not good long term. They might be good short term, but they're not good long term. Let's look at another example here. A couple more things here. What's the difference between inflation and deflation? Real quick. Inflation is consistent and substantial. The rise of the price is called inflation. So it's consistent rise of prices. Okay. Deflation is this: consistent, and substantial fall in the prices is called deflation. So when prices start to come down again, all is consistent, that's deflation. Now, both inflation and deflation have their moments when it's good for the economy. Both go to extremes, it's bad for the economy. So that's what the Federal Reserve really was set up to do, was kind of balance that portfolio, if you will, to keep a certain amount of money flowing into the economy so that it injected money so that we could go out and exist and so forth. But when they inject too much money in the economy, then that dollar has less value, and therefore its buying power is less. In other words, it has less value, so when it wants to buy exports, or imports, I should say, it has to pay more dollars for it. So when it pays more dollars for it, when it comes in, the retailer at the end of the day is charging more for the product, right? So basically, let's look at it this way. When prices go down, then it's deflation when it starts to go down. That's good, but if it goes down too low, there's no profit margin in the company, and therefore wages begin to lower. Okay, so it's all relative, but if I was used to a certain lifestyle, and now I can't quite maintain that lifestyle, then I might leave my job to find another job. Prices going down are not nearly as a threat. Well, they are. Because if it goes down too much, then in the dollar, well, it's actually not bad for the dollar in deflation. I mean, there's bad points in there. I'm trying to put it brief. It's actually safer in deflation than it is in inflation. Because with hyperinflation, you could cause a collapse on the currency, like we saw in Ecuador with the sucre, you see in Argentina, you see in Mexico with the peso. You cause a Brazil too. When I lived down there with the cruzeiro, it caused this collapse of the currency, and they had to replace our currency, and it collapsed the economy. So hyperinflation is actually worse than deflation. Deflation has bad moments too, but for the sake of this video today, we're going to focus on inflation, hyperinflation. Cause of inflation. Increase in public spending. In other words, we have more free money available, so we'll go out and buy more things. Like when the governments in the United States and the governments around the world are injecting and printing money to inject in the economy and giving away money. Now we're talking about giving away money at like $2,000 a month to certain qualified individuals in the United States. So basically, they're going to get $2,000 a month. Well, that money is not earned. That money is easily received. So money that's not necessarily earned is easier spent as well. So therefore, you could cause also inflation. Okay? Increase velocity of circulation. That's what we're talking about. If a government begins to print a lot of money and put it in circulation, that also will cause more money in hand, and we spend it. Okay? Higher wages, we first get more money, we go out, first thing we do is go out and start buying the things to fulfill our dream. Exports. When we're importing more than we're exporting, that also has an effect on the value of the dollar. So if we're not exporting as much as we're importing to keep that balance, then we also have an effect on the dollar. What I want to focus on here are just a few areas. Trade unions, we talked about. Trade unions, they actually force companies to give higher wages. Generally, when a company is having a hard time meeting their demands. In other words, they got inflation. So inflation going up, they're paying more for their goods. The prices go up, and the price can only go up so far that a consumer will actually buy it. Then they come in, unions, and say, now you have to give all of our group higher wages, or they're not going to go to work. So they won't have any production at all. So at some point, they have to raise the wages, have an agreement, that increases prices. What happens there is, you then, generally speaking, are going to affect the bottom line of the company. It's actually either manufacturing or selling, whichever. When you affect that bottom line of the company, then you affect whether the company continues to do business or closes doors. So that's where unions come in, and they have a bad effect on the economy. Unions are not good for an economy. I know people out there, I have friends that love the union because they got all these benefits, but they don't think about that job in the future. If the economy changes, they'll be some of the first ones to collapse because they're obligated. Right? So smaller companies, non-union companies, actually are more flexible when a bear market or downturn comes in the economy. Tax reduction. Well, this isn't necessarily true. There's a bunch of people you're going to talk to. You got these people who like high taxes. The thing is that people say, well, when you get tax reduction, you have more money in your hand to spend. But that's not necessarily true. Americans have shown over the years that when there's a tax reduction, they don't go spend all that money. They save that money. They invest that money. So therefore, when you're investing money into something and the dollar's not circulating, you're investing like in real estate, or you're investing in new businesses. In general, what happens when a company has a tax reduction, they can actually have more money for salaries and they expand the company. So it's actually really good for an economy, tax reduction. So tax reduction really is not a cause of inflation. They can say, well, put more jobs, more income, more spending, but that's relative. Like I said, most people, when you have tax reduction, will also, because most people who are paying taxes, being businesses, will also reinvest that into their company and put away for bad days, bad times. So when they put it back into the actual banking system, then it actually supports the system and actually lowers inflation. It keeps things more stable. The tax reduction actually is good for the economy. Imposition of indirect taxes. So taxing in itself is also causes inflation. If we're going to tax gas, we're going to tax products, we're going to raise our sales tax. That raises the price of goods, which means now I need to go back to my employer and I say, hey, I want more money because I need more money to live, right? Or whatever I spend, I got to pay more money on. So I got to try to raise whatever I'm selling, my services or my goods, to actually pay for that. So a rise in taxes, any taxes, cause inflation. When you increase velocity in circulation, you create more money, then they can keep up. You just want to inject it. And then you have that increase in public spending from that injection. That's going to cause inflation. So what's our concern here? We've had, just this year alone, we have printed more dollars this year alone than we've printed since the history of dollars. And there's actually more stats to that. But the history of 200 years of dollars, or whatever we have of dollars, has been printed more just this year than there was all the way up to this point. So that's caused a lot of faith to fall in the dollar. Therefore, there's a talk of a digital currency coming out now. Not just the dollar. United Nations digital currency, or World Bank, I should say. Each country is talking about it, or many countries are. The United States is talking about implementing one in 3 to 5 years. What's that going to do to the dollar? That's a good question. Really good question. All I know is this. Inflation is on its corner, and this is how it works. 1970, you could buy a cup of coffee at 25 cents. 1980 was 45 cents. 1990, 75 cents. $2000, 2010, $1.25. And 2019, $1.59. Why? Because the cost of goods, labor, everything rose. Insurances. People out there doing, I was driving through the States and I heard all these commercials about, if you were around your employer, made you be around certain toxic gases, call us. We're going to sue your employer and you can get entitled to money. Attorneys cause huge inflation. They really do. I mean, I have attorneys. I have to work with attorneys. We have attorneys here in house. But attorneys, those predatory litigative attorneys, they are a parasite. Sorry if you're an attorney, but it's true. And you feed off of taking advantage of insurance and other people, which only cause everybody else's insurance rates to rise. We all got to pay a price so you can become a multimillionaire. And by creating these frivolous lawsuits and jam up the court systems so we cannot put real criminals behind bars. That irritates me. So being forced causes inflation. Now let's talk about something else. Let's do something everybody likes here. James Bond car, the 007. All right. We know here that the, let's take a look here. I'm going to say the Aston Martin, right? The Aston Martin, the James Bond drives. Let's go back here to this. There's our Aston Martin. That's the new one. All right, let's go back and look at something. Okay, an Aston Martin roughly sells between 100,000, 50,000. It depends, right? But jump down here. How much is the original James Bond car worth? Well, its price tag is at $883,000. It was put on sale in August of 2017. Watch this. The cars which were used in the movies, okay, of James Bond have even a higher price range. One of the DB5S's, Aston Martins, was auctioned on August 15th, 2019 for $6.4 million. Now, it's because there was one of them and it had a higher value. So that person, millionaire obviously, put that money in Aston Martin knowing that people were going to want that. It's going to have intrinsic value to it in the future. So that's a hard asset. Okay. When you have money in your hand, that's a liquid asset because it flows through your hands. It's there and it's gone. Hard asset would be like gold, silver. Even you can consider a hard asset cryptocurrencies because you're holding it in a cold wallet, something hard, though you don't touch it. Bitcoin, if you buy an actual coin, the original coins, they actually do have a lot of value to them because they're actually gold as well. But a hard asset is something you can put your money into. So I guess Bitcoin is considered kind of a liquid asset in a sense, but it plays the role of a hard asset. Hard asset means I have something tangible and it's going to have a value to it. Whereas a dollar in itself, and that value is determined of the hard asset by the market. The dollar itself, the value is determined by a global market as well as by governments. We know anytime we put our trust into a government, we're taking on a lot of risk. So look at this. The car sells for $6.4 million. Let's talk about this for a minute. We take Sean Connery's car, for example. I don't know which car it was. We take the Aston Martin Sean Connery used. We have one of them. If we produce 20 of them, would it hold the same value? No, because now there's 20 of them. So people have the option to go buy it somewhere else. Therefore, it goes down in value. So the fewer they are, the more people are out there that want it. And so because they want it so bad, they're willing to pay a higher price to get it, right? Watch this. This is where we come in with cryptocurrency. Now, you're going to see a lot of poo-poo on cryptocurrencies, especially Bitcoin, because it dropped recently. They say it's because of the threat of inflation. I don't think it was that. Bitcoin's been proving well over the last 11 years. I think it's more because you have these large financial institutions now buying Bitcoin, and they can manipulate the market. I don't know if you've watched it or not. You saw these huge spikes in a lot of cryptocurrencies. That's usually a spike of a whale or somebody has a lot of it dumping and then buying again. So taking profits, buying what's below, and then bringing it back up again. So they can receive profits on their books from what they bought below as well. When it spikes, they drive it up, sell, let it drop, buy back again with the profits. So it shows profits on their books as well. So a book shows double profits. We're going into the end of the year. So you have all these companies now that want to try to show good profits on the stock exchange so that they can go into next year looking as if they were profitable in the reports they're going to give to all their shareholders, which is really a false truth. They're showing on paper, they're realizing profits, and then showing on paper profits. So they're doubling the profits. And I think that had more to do with the dip in cryptocurrencies, amongst other things. But that primarily had to do with the dip in cryptocurrencies than it did that it's not an inflation hedge. Plus, the financial institutions want us to steer out of cryptocurrencies and go back into the banks and the stock market. Many say stocks are the way to go. Stocks outperformed Bitcoin this year. That's not true. But stocks grew, and when Bitcoin grew, was a lot higher of a percentage. Now, certain areas of stocks, yes. But here's what you got to consider. The Federal Reserve is buying up stocks. In other words, our government's buying up stocks. It's not the people buying it up. It's governments buying it up. That's a false buoying. That's a false front. If, or I should say when, the economy tanks, the dollar possibly collapsing due to hyperinflation, those stocks are going to collapse. Those companies are going to collapse. This we saw in 2008. All those stockholders lost money. The stock exchange is notorious for losing money. Bitcoin, on the other hand, only if you sell at the bottom are you losing money. You can stay there and ride it back out. Now, some are forced to sell out to actually pay off debts and so forth, and therefore they increase a loss. That's true. But holdings in Bitcoin cryptocurrency right now versus holding in traditional stocks are much less. You're only talking about less than a $3 trillion industry. Gold in itself, if I'm not mistaken, is like an $8 or $9 trillion industry. You bring in stocks and bonds and everything else, you have a lot higher of a greater portion of the industry. So holdings in cryptocurrencies right now are not going to put them in a high risk factor. Just the opposite. Though you're going to see a lot of people out there that are anti-cryptocurrencies because it's going to take their jobs away. They don't like it. They don't know it. They don't understand it. So somebody who does is going to come in and replace them. So they're going to be poo-poo on it, obviously. But let me show you something. Remember I said that Aston Martin of James Bond, why it's so valuable? Because there's only one of them. Well, what makes Bitcoin so valuable? Read here below this article. This article is out of, I don't see where it's out of here, but it's an article here from an investment magazine. Bitcoin was trading around 47 lakhs in October. Time of writing, this is back in October, right? Here we go. Now Bitcoin's fallen some. This is why they're saying, oh, you see, it's not going to work. This proves that the people were seeing Bitcoin as a better investment option than yellow metals, gold. Why? Because gold lost 8% this last year, where Bitcoin rose over 200%. What also works in favor of Bitcoin is limited supply. So there we go. I don't know exactly how much Bitcoin rose. I think it's like 200%. Regardless, it outperformed. It rose. Gold didn't. Now, why is Bitcoin considered an investment hedge? In other words, a hedge against the dollar. I saw an expert today said, invest in hard assets. Get out of the dollar. Of course, I saw an art, listened to Robert Kiyosaki the other day. He said, you want to know where to invest right now? He said, silver, gold, Bitcoin, and bullets. That's what he was saying, right? I had to laugh at that, especially coming from Robert Kiyosaki. We know Robert Kiyosaki has always done well, and many times outperformed the S&P, outperformed these professionals on Wall Street. And he does not like Wall Streeters, and nor do I. I feel they're into it from themselves, and they're bought out by the banking system, which controls the governments. And that's a true fact. Remember, we're not financial advisors here. We're trying to help you understand so that you can better prepare for yourself and what we think is coming. A lot of experts greater than us also think it's coming. Where are we going to go? Silver, gold, Bitcoin, and bullets. I say that facetiously and jokingly, but there's a reality behind that. Hyperinflation brings on higher crime. Look at the runaway crime you're having right now. Chicago, Los Angeles, where they're not allowing their police to actually come down on petty theft crimes. You know, in most areas, like in California, You can steal $2,000 and not be arrested for it now? Yeah, Governor Newsom, thank you. They've increased crime. San Francisco's horrible. Los Angeles is horrible for crime. Not necessarily people. There's some good people there. There's also very horrible people to support this. So when you have crime, you're not able to hold on to your goods, your tangibles. Gold and silver, there's a problem with that. What do I do with it? Where do I hide it? Where do I hoard it? Because the best way to have it is physical. I can have it and have shares of a company that has it, but then what if something happens to that company? What if the government comes knocking on my door like they did in 1930 saying, give up all your gold? They're going to give up my gold. They're going to say the law is going to make us. But if I've got my gold buried somewhere, I can decide whether I want to give it up or not. The problem is, if you're higher crime, how do you keep it? Therefore, the only option is cryptocurrencies. And not all cryptocurrencies will survive a bear market. Most of them will not. So you're going to have to know which cryptocurrency to invest in. One right now, because it's a limited supply that's going to produce over the number of years, is Bitcoin. And that's why it's proven. And that's why we also are in Bitcoin and a couple assets, facets of it. And we encourage the mining of cryptocurrencies. You want to hoard or hold, which is good. Learn how to which ones to hold in. And that's what we're going to do here throughout the year. We're going to share with you at least 12 over the next year, if not more, 12 to 20, where we are going to put our money thinking there's a long-term, and if the economy goes down, the dollar pump dumps, that we will make actually rise in value. Bitcoin is one of them. That's the chief of all of them. It's proven. Silver, gold, Bitcoin. Okay? And if you want to add bullets in there and you got extra money, I guess you could do that too, depending on what country you live in. But that is what Robert Kiyosaki just recently stated. And we have to agree 100% with that. Real estate's another area, but here's what happens in real estate. If the economy tanks, real estate values go down. I saw that with my own personal company, and I lost millions of dollars having all real estate holdings back in 2008. Literally millions of dollars. Myself and with my investors. There's nothing I could do about it. I tried. I worked hard to try to bring things back up. The economy still hasn't recovered in other countries, especially in Latin America, like it was prior to 2008. So real estate is risky. Where are we going? Silver, gold, Bitcoin, cryptocurrencies. That's where we're going. And start to begin to prepare your home for food and storage. All right, storage, shelf storage, and like pantry storage, canned goods, mainly, and other types of different legumes and things of that nature that you can actually airtight and seal. We're going to do another video right now. It's going to come out tomorrow. This can talk about what kind of canned goods you could do, put in there, and what other cryptocurrencies we suggest you can start to buy into, that we're going to buy into, that we're sharing, right? And that we suggest to our friends. If you want to take that advice and do your own research on it, that's great. We encourage you to seek financial advice, but we encourage you most to seek your own personal research too, because there's a lot of financial advisors out there that don't understand cryptocurrency right now. And we're not one of them, financial advisors, but we do understand cryptocurrencies, at least to the degree that we can help determine which ones are going to be safe, not safe for ourselves. And we'll share that with you. And you do your own homework and do your own research. Remember, this is not financial advice. Okay. DeFi IoT Latin America. We're going to change it up a little bit. We're going to have a little fun this year, and we're going to be called now the Ninja Turtles. Okay. And I'm going to be Master Splinter. And we're doing that because we feel we can kind of relate to the Ninja Turtles. And our idea is we want to go out and protect and help and maintain that free market economy and help you maintain value and your wealth. So from the Ninja Turtles and Master Splinter, we're signing off until tomorrow. DeFi IoT Latin America. Catch you later.